It's time now for the Gem Young Wealthcast. Brought to you by Gem Young Insurance and Wealth Advisors, a family-owned independent insurance and financial planning agency since 1947. Now, from their studio on Star Center Drive in Canfield, Ohio, here's the host of your program, Leo Daprile.
Welcome to the Gem Young Wealthcast. This is Leo Daprile. Our series this month is focusing on different aspects of insurance because that's just as important as talking about money, because so much of you spend so much of your money on different parts of insurance. And many of you are at the Medicare age, and some of you are just getting there. So if you're familiar with the Medicare Advantage market and Medicare, it's a pretty complicated and fast-moving these days and often changing market. So I thought it would be good to give you a refresher since we're in the acronym fest of the Medicare system, right, Jared?
Correct.
Okay, I call it all the time. And I say this all the time, that when you deal with the federal government, everything's an acronym fest,
Sure,
right?
They got to confuse everybody they can.
Yeah, well, they confuse me too, right? Like we were talking yesterday. I said, just taking the test to stay certified every year, half of it is remembering the acronyms of what we have to do. I don't know how the average consumer keeps all this straight.
And it's not just a couple letters. Sometimes it's 5-6 letters.
I know, right. And even
AEP, that's a nice simple one.
Right.
We get in the other stuff, and it's just crazy.
So we're in the OEP.
We're in the OEP. Yes.
I'm not joking. We're really in the OEP,
Yep.
right?
Correct.
So there's been a lot of changes so far for 26. There's a lot people really need to pay attention to if they haven't yet, because Medicare is one of those things. It's no longer a set or forget scenario.
Correct.
Right.
That's the big thing with everybody, and I try to, get that across every time I do a seminar, anything like that. It's like, get an advisor. Yes, I'd like it to be me, but get somebody you know and trust. That's my number one thing I try to get across to everybody.
Right.
It changes constantly.
So let me formally introduce you, because I didn't do that yet, because we got right into the acronym fest, right? This is Jerry Balestrino, better known as Medicare Jer. He's our resident specialist in all things Medicare, and it's a learning curve. So
Correct.
So as we're in the OEP, let's start here by saying we just came out of the AEP, the annual election period. Now we're in the OEP. So what is it? What can people do with it?
Well, one of the things with this time of year is if you delayed your sign up and you didn't get a chance, you can sign up now until March 31st. That's the big thing that's going on. You can also take a look at your plans, and there are options. We're not really advertising, as far as like you can make changes, but you can talk to your advisor. If there's an issue with an Advantage plan, there are some options for you. So that's what I always tell people, if you're having trouble with this new 2026 plan, reach out to us, because we do have some options available to you.
So when you say delayed sign up, what does that mean? Somebody that just didn't do it when they were supposed to?
Correct. Let's say you turned 65 or retired in June of last year, and you had your time period that those 3 months after, and you delayed, you forgot. And so you can't sign up after your initial election period. You have to wait until the following year.
That's an acronym. That's the IEP.
That's the IEP, correct.
Got it.
So, people, and it happens a lot. They're like, I didn't realize that you have to wait until next year. So we can do that on the OEP from now until the 31st, and it'll start the first day of the next month. So if we signed you up now going, hey, can you get me in there so I can get started on my Medicare? Sure, it'll start the 1st of February. If we do it next month, it'll start the 1st of March.
Okay.
So it's always that first day of the following month.
So if you skip the IEP, you have the OEP.
Correct.
Right now.
Yes.
Okay. All right. So in the AEP, the October 15th to December 7th change period, I'll call it for simplicity, right?
Okay.
And you changed your Medicare Advantage plan, and you're starting to use it, and you go, well, hey, this isn't what I thought it was. It's not paying the way I anticipated it to be, or they didn't tell me things about it. I'm not happy with it.
Correct. And then you have an option that, like I said, it's not promoted. We can't really advertise it, but there are options available to you if you feel you made a mistake, and you can reach out to an advisor and they can go over the different options you have.
Right. And this is a good conversation, because this is not a promotion of the open election period, open enrollment period.
Correct.
It's more of saying, okay, let's talk about why it's here. So that's really what my goal is. So if you had that plan and you weren't happy with the plan, or it's not working the way you expected it to, You have this from January
like
1st.
a safety net.
Yeah, to March 31st to change that plan.
Correct.
Can everybody change their plan?
That would just be for Medicare Advantage people. That is the only option that this plan, this time frame is for.
Okay.
And it's if you made that change. So and I always kind of say it's along lines where there unfortunately are some unscrupulous people out there, and
Sure.
that December 5th rolls around and they sign up for this plan and they're like, hey, they get them on the books and they realize it's not going to work for them. So that, or it could be any plan. Hey, I didn't realize my silver sneakers aren't there. Even whether the agent did it for them or not and told them about it, they look at it and say, this is very important. I want to plan with. So they do have options, and they can basically get out of that plan if they made that change during the election period from October through December.
So let's talk about maybe somewhere the rubber meets the road. Okay. There's a lot of changes that happened in 26. So
Sure.
people were trying to digest the changes during the annual election period. And then that's why I brought up, not just hypothetically, but with all the plan changes, once they start seeing how these contracts are being interpreted and being used, they may not like it. So let's recap some of the changes that happened in 26.
Some of the big changes, probably the biggest thing was the prescription drug plan, whether it's a standalone prescription drug plan or the one attached to a Medicare Advantage plan. The premiums have gone up on them. Co-pays have gone up on them. I've had calls already where people, whether they stayed in their current plan or went to a new plan, they're like, I didn't realize that this prescription I get, I used to pay $10, now I'm paying $20. And that's unfortunate because that's the big change. And that's why we always say, like you said at the beginning, it's not set it and forget it. Even if it is that Advantage plan or a supplement plan with a standalone prescription drug plan, you need to look at that every year. Whether your prescription's changed or not, is that plan going to work for you for the coming year? So all these people I look at and say, hey, in 2026, we're going to sit down, we're going to look at 2027. Are your prescriptions staying the same? Are there going to be more costs? Is it going to, so it's a review. You need to do that every year. Some of the other things that have happened is a lot of these Advantage plans have removed some benefits. So it gets more expensive for them. Without mentioning the names, some did remove their silver sneakers, and people are upset. That's a big deal to a lot of people. They get over-the-counter cards. Some of the over-the-counter cards went from $100 down a quarter to $30 a quarter. So that's what they can get their not prescriptions, but as far as cough medicine and aspirin, things along that lines. And it's a nice little added benefit for seniors. They can go and say, hey, I get all my vitamins on my little over-the-counter card.
So it's fair to say that in 2025, a lot of insurance companies weren't raking in the cash profitable from a profitability point of view on their Medicare Advantage programs. So that's part of what's leading to these changes. It's not nearly as profitable as it was, number one.
Right.
And I want to go back to drugs for a minute and dive a little deeper into that. Every company has what they call a drug formulary, right? I'm saying this for the benefit of our listeners.
Yes.
Okay. And there's 3 tiers to every company's prescription drug plan.
Typically 5. I mean, there
5?
could be 5
Okay.
and 6 depending on the company and how they will put together their plan and their formulary.
So every year, every insurance company that offers a prescription drug plan makes changes.
Correct.
They could add tiers, remove tiers, move drugs up and down tiers.
Correct.
Even though they have to keep certain amount of drugs in each tier, right?
In each class. So they have to have something on formulary for each classification. So they have to have a drug, whatever tier they put it in, that's their choice. But if it's to prevent or to help with any type of condition, that company to have a prescription drug plan or have a formulary must have a drug in that class. So they have to have something. What they charge for it and what tier they put it in is up to them.
And that's a big deal. So I'm glad you're bringing that up, because if companies are seeing that a particular drug is a huge money loser,
Correct.
they may keep it. They may find a suitable alternative, and they may also move it up a tier so that there's more cost sharing for the end user.
Correct. I just an example, not bringing up the medication because I don't want to get into, cloudy waters, but A lady was on a medication last year, was costing her $400 a year. And this year it's going to cost her almost $900.
Wow.
And it didn't make any sense. I'm looking, it's the same company. I was like, they didn't change what's going on. And through research, we found out it was the pharmaceutical company increased the costs because it's going generic sometime this year. So
Wow.
they're looking at it going, well, we need to make a little bit more because we know people are going to jump on this generic brand or this generic drug, and our name brand's not going to be as popular.
And this is why Big Pharma gets a bad rap.
Correct.
Because they do things like this.
Yeah. And I mean, well, and you kind of look at it. So, and just playing devil's advocate, if you're looking at, you're losing, money on this drug because something else is going to undercut you. Well, we need to make something, we're still trying, we've got our timeline that's running out and the generics are coming. So, I don't look at them and say, hey, that's a great thing, but I can understand where they're going, we're about to lose everything. Or at least a good majority of our income on that prescription.
Wow.
So it kind of works both sides. Yeah, it's a bad thing, and that's why we look at other companies, other, formularies. What can we do? Is it going to be the same across the board? And this prescription, yes, it was.
So I know these days, and we were talking before the podcast, that we're actually increasing the number of Medicare Advantage providers.
Correct.
So that when people come to talk to you, it's not just one company that you have at your disposal. You have 5 or 6?
We've got 8.
8. Awesome.
So, and there's, I tell people, with our plans, we have 8 different companies, over 193 plan options. They wouldn't qualify for all of them. Some of them are for, Medicare, Medicaid people. It's different zip codes, things along that lines. But we have a very nice portfolio to offer people, saying, hey, if you don't like the company A, well, don't worry. We got company B, C, D, E, so we got a lot of options for them.
And that's why this has always been the philosophy of Gem Young is doing what's right for the client matters most, not what's right for an insurance company.
Correct.
Yeah. And because a lot of folks, when they don't have the number of companies like you have and the number of plans that you have available to offer, because at the end of the day, and I think this is important for listeners too, your commission is the same regardless of the company.
Correct.
So it makes, so you have no company loyalty because nobody's going to pay you more than the other company.
The other thing I tell them, it doesn't matter. My job as an advisor is to sit down and say, let me see your lifestyle. Let me see your prescriptions. Let's see, and let's tailor something. And I give them an option, or usually 2 or 3 options based on everything you've told me. I think these plans are good ones for you. This company, and this company works out with what you've told me. Now you decide. That's where I don't want to say expertise, but that's where my knowledge of the industry comes in. By what you said, you travel, you don't travel. All right, let's look at this company A because I think that's a good thing for you. And then they decide from there. And I think that's the best thing. And I tell them flat out, it doesn't matter to me. This is your plan. And yes, we can look at, if it's an Advantage plan, we can look at it again, next year. So if it's, I didn't like that. All right, we'll take a look here for 2027. Supplements are a big thing because when you get in a supplement, you're going to stay with that for several years. And it's a little bit more difficult to move out of a supplement plan. So I tell people, choose wisely.
So when someone sits down with you, and let me back up. 2 years ago, when we were thinking this all through and we were starting this, there was a whole bunch of same amongst Medicare Advantage providers because it was quite a lucrative business for them.
Yes.
It's not as lucrative anymore because the baseline Medicare Advantage product has to be the same or better than Medicare itself, Medicare Part A. And we'll get back into that too in a minute too, driving through all of that. So it was profitable enough for insurance companies to offer these extra benefits. So, and then they were competing for business years ago on who had the better extra benefits.
Correct.
And now that's kind of that ship's kind of turned, hasn't it?
Yeah, they are, well, it's costing them money.
Right.
So if they're not making as much, it's like, well, I can't give $120 with over-the-counter benefits. And quite frankly, if you think about it, that is quite a bit of money to use every quarter. And I know plenty of members with different companies I've worked with that say, I don't even use it. And I kind of follow that up with, please do. That's
Sure.
they're giving this to you. It's give it away. Donate it. Things along that lines. Go pick up the Band-Aids and drop it off at the food bank or your church or things along that lines. But yeah, they look at it and it gets too expensive for them. So these companies are dropping it and saying, you know what, or we can't do $100, we're doing 30, or yeah, it's. I always tell people too is, you know, this is healthcare, so these extra benefits are nice,
Right.
but the bottom line is you want something that's going to pay your bills and help you when you need it for your healthcare.
Right. Right. Last fall, Jerry, I was sitting out back. One of Kimberly's neighbors and two of the folks there are on Medicare, and they were having this discussion by saying, "I have all this money left to spend. I don't know what to spend it on." So their discussion was, "What can we spend it on?" So, and I'm thinking, oh, that's excess in a system, isn't it?
Yeah, that's just, and it's already paid for. That's the, you know, they're hoping you, I guess you don't use it, but on the same note, there's our costs going up. So when you look at, well, my copay is X number of dollars. Well, they're giving you this extra money for, you know, to use over the counter. You got to balance it out somehow. So
Right. With all these changes going on in Medicare, Jer, like that, Medicare, Jer.
yeah.
My
I should
listeners
have that
are.
little. I should have that little picture.
Yeah. Everybody knows I'm a smart aleck, Jer. I just don't hide it.
Yes, I know that. What am I, 6 years here?
Yeah. It's only felt like 20, right?
No, it's not that much, but
Yeah.
it's.
Are you finding that there's becoming significant differences between the insurance companies these days because of all the changes in 26? The reason I was harping on the drug plan so much is, you know, it really resonated with me that there's could be 5 to 6 different tiers. And when people go on a medicine, you know, and if it's changing tiers, or they this year go on a medicine, you know,
Yeah.
it's really a lottery of what it's going to cost them until they see it in that plan. So when somebody comes to see you, here's the specific question: is it take a lot of time, and is it pretty easy to do a screen to see what coverages are for what drugs? Do the insurance company websites let you go in there, put your drugs in, and see copays?
Yes, we have what's called Smart Enroll, and I can pull up just about every company and look at it and say, here's an estimate of what your drug costs. On company A, they're putting this prescription you're on in tier 2. That's a generic. So there's your preferred generic, your generic, your preferred brand, and specialty drugs. So it all depends on which tier it's in, and then of course the cost gets higher the higher the tier you go into. So, and the companies can choose. Sometimes tier 1 and tier 2, the generic and the preferred generic and the generic could be a zero copay, or it could be on the generic drugs, which is a little bit lower than preferred. Maybe you have a $2 or a $5 copay. And that's what changes, where people go, I used to pay nothing for this drug. Why am I paying $5 for my prescription now? Because they changed tiers.
Right.
And that, you know, so it's, yeah, I can look in and say, here's the estimate. We're looking at it, you know, for your 90-day supply, you're going to pay $15 for this one. This is going to cost you $85. This one's going to cost you $400. And then, of course, we have the maximum, or the true out-of-pocket cost with prescriptions for 2026 is $2,100. So when your out-of-pocket reaches that amount, you're considered catastrophic. You don't pay any more for your prescriptions.
Okay. Did that go up?
It did. It was 2,000 in 2025, and now this year it's 2,100.
So in the last couple of weeks, CMS, Center for Medicare and Medicaid Services, right? CMS.
Acronym.
It's a good thing we're not sitting here saying, let's have a shot for every acronym we pull out, right? We'd be blind before the show's over.
We need 3 or 4 bottles. Now let's think about that show.
Yeah, that would be hilarious, wouldn't it?
The views. I can guarantee we get a lot of views on that.
Yeah, I think we would. So, have there been? Are you seeing a lot of people? Are they changing their plans because of the change in the drug plan? Did you experience a lot of that?
No, honestly, it's because we look at it and drug plans stay pretty similar to each other. You know, it's one might be a few dollars more, this one a few dollars less. That's why we review it and kind of look at. But it's the copays that people look at. So everyone tries to keep their formulary. You know, when you're competing with somebody, you want to know what your competitor's doing. You can't let them outprice you to the point where, you know, it's going, geez, nobody wants my product because I cost too much. You know, it might be a better product, whatever it is, or I should say it's the same product that you're getting from my competitor, but you're paying less. So, they kind of try to keep that in line, make sure that, those are in line. And then you look at everything else as a whole. Are my prescriptions going to be a little bit more? Some of them have a higher out of pocket, as far as the maximum, or when the deductible starts, or your amount that you pay for your deductible. So everyone's got their own little, what's important to them, I should say.
Okay.
What's this person looks at it and says, I don't care. I'll never hit my, I'll never pay my deductible. My drugs don't cost anything. It's not important to me. Somebody else looks at it and says, I want my deductible as low as possible, not that $615. I want it at $200 because I want them to start paying as soon as possible. So it's everybody looks at it a different way, and that's why we give them all the options. But it's as far as like, hey, my drug's costing too much, I need to look. Well, typically if we look at this and say, hey, yeah, it's going to cost a little bit more here, but your plan's great. This one over here might cost you a few dollars less, but you're losing these things that are important to you. So again, going back to, you got to meet with somebody. It's review every single year, because it doesn't just coast along. And people end up going, I didn't know. Well, you did, or you had the opportunity to know, and then you got blindsided, and now you're stuck with it for, a year, which isn't bad, but that 1 year could cost you a lot of money. So
if you're in a Medicare Advantage product and you did not make any changes during the AEP, another shot.
It's just coffee, honestly.
Yeah, right.
That's why I'm drinking it. So.
Yeah, that's right.
Just lower it down here.
Yeah, that's right. But they can see us, but they can't smell it, so we're okay, right?
And the slurred speech hasn't started yet,
yeah,
so
well.
we're good. It's on.
Yeah. So if somebody made no changes in 25, 26 rolled around, they filled their prescriptions in January, and wow, I didn't expect these changes, and we're in the open enrollment period, can that person come see you and says, look, I don't like what's going on with my Medicare Advantage plan. Since I didn't go through the AEP, do I still have the opportunity to make changes now?
No. You are with that plan for the plan year. So it's only for people that have made a change. It have that option if they feel they made a mistake, that they can go back or make another change.
Okay, that's important to know.
It is very important.
Right, so that's why the AEP is such a big deal.
Yeah, it really is. That they give you your chance to review your plan and sit down and say, this is what I'm going with for next year. And, it's a lot of people just say, hey, my plan's working out good. And that's fine. I can review it with them, say, I think everything looks great. I think I can throw my brother and my sister-in-law out there. And I looked at him and I said, Tom, your plans don't do anything. Well, what about this over here? I said, well, here's what you're losing. Well, I heard about this one on TV. Okay, that's a fine plan, but what about this? I said, your choice. No, those aren't bad plans, but here's what you're giving up if you go to that. Well, I don't want that. Well, that's why I said, you kind of,
right.
People see these commercials and like, you can get, $900 in your pocket, or, we'll pay this and we'll pay that. Yeah, but what are you giving up?
I want to tie that in, but I got to take a break because that's really important. I want to tie it into other insurance, how people don't do that and why it's so vital that they do. So I do need to take a quick break. Okay, this is Leo Daprile. This is the Gem Young Wealthcast. We'll be back after this break.
At Gem Young Insurance and Wealth Advisors, we know every financial journey is unique. That's why our team of financial planners, paraplanners, and service professionals work together to provide personalized strategies for a work-optional lifestyle, investments, and risk management. We're here to help you plan for today, protect tomorrow, and enjoy the life you've worked so hard for. Take the first step toward financial confidence. Call Gem Young Insurance and Wealth Advisors at 330-533-6936 to schedule your fit meeting today.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
At Gem Young Insurance and Wealth Advisors, we know insurance can feel complicated and overwhelming. That's why our team is here to listen, understand your unique situation, and provide solutions that work for you. From home and auto to life, plus a team dedicated just to commercial insurance, we help protect what matters most without the stress. Don't wait until an issue arises. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 to schedule your fit meeting and get the protection you need today.
Now, back to the Gem Young Wealthcast, brought to you by Gem Young Insurance and Wealth Advisors. Once again, here's Leo Daprile.
Welcome back to the Gem Young Wealthcast. This is Leo Daprile. If you're just joining the podcast today, I have Jerry Balestrino with me today, better known as Medicare Jer. Hi, Jer.
Hi.
How you doing today?
Wonderful.
So we got into a lot of good stuff about changes, especially with prescription drugs for 2026. I want to back up a bit and go over some things because there's 4 parts to Medicare, Part A, B, C, and D.
Correct.
Okay. Part A is, if you're old enough like me to remember back in the day, that used to be called hospitalization insurance.
Correct.
Part B, we used to call it major medical. Part C is the Medicare Advantage option, and Part D is your prescription drug.
Correct.
Okay. There's a lot of misconceptions, especially if people are getting to that age where they're ready to go on Medicare, right?
Correct.
And there's some critical time frames and things. And Medicare Part A and Part B you pay for Part B out of your Social Security check. Part A comes with you if you've been a taxpayer for enough years, right?
10 years.
10 years, right?
40 quarters.
And Part C is the Medicare Advantage, which provides a lot of solutions that A and B do not.
Correct.
Okay. So let's talk about some misconceptions and things that worry you of the mistakes people make.
Probably the biggest thing that I hear when people turning 65 go into Medicare, that they're automatically enrolled. And they are not. They could automatically be enrolled if they're collecting Social Security. Yes, when they turn 65, if they're already collecting their Social Security income, they are automatically going to get enrolled in Part A and Part B. They will start paying their Part B premium. And the reason why that's a big deal, because some people don't realize maybe they're on a spouse's plan, and that spouse maybe is younger, or the spouse continues to work, and they have this great health care plan through work or through an employer, and next thing you know, they're paying their $202 a month because they're collecting their Social Security, and they're like, I didn't know. Well, you need to stop that because it was automatically enrolled. Then you have the other people that, hey, I'm working, it's no big deal, I'll just, my Medicare will start when I turn 65. It doesn't. They don't know. If you're not collecting Social Security, they're not real worried about you turning 65. So if you want to start your Part A right then, which is free to you because you've worked for it and earned it, and I encourage people, when you turn 65, get your Part A. You've already paid into it. It kind of piggybacks off of your, health care through your employer. So, and it's just your hospitalization, but it doesn't hurt to have it. And then when you're ready to go into your Part B, or say you're retiring, we can very quickly get you your Part B started and get you into a plan that's going to work for you. So that's the big misconception. Is I'm automatically enrolled, and you're not. Again, talk to an advisor, and we'll explain to you what your situation might be a little bit different or what you need to do. Lady I just spoke with, she's like, are they going to sign me up for Part B? And I said, yes, they are, because you're collecting your Social Security income. You've got to contact them and say, do not sign me up for her hospital. Her husband has wonderful hospitalization. And I said, stay on that as long as you can. I said, you don't give that up. It's a good plan.
So you're not, or you are automatically enrolled at 65 for Part B.
You are not, unless you are collecting your Social Security income.
Okay, so that's the big point.
That is the big point.
So you're still working. You work for an employer that has more than 20 employees, and so your employer's insurance takes precedent over Medicare.
Correct.
You still need to apply and defer, right? No. You just have to prove then. Let's say you're 65, but you work till 68. You just have to prove you had prior coverage.
Correct.
If you don't, it's a pretty significant penalty.
There's a pretty good penalty if you do not prove that you had coverage for those 3 years. And, essentially on the Part B premium, you're looking at 10% for every year. So every 12 months. So right there, you're looking at an additional 30% for those 3 years.
Wow.
And and that's for lifetime. You're going to pay that the rest of your life. So If this person's paying $202 a month for their Part B premium, you're paying, $280.
Jerry, do you find that when most people are signing up for Social Security, they don't factor in the cost of Medicare Part B when they're figuring out their benefits?
Yes, I see that a lot. And it's a big deal because when I tell people, especially on a supplement plan, and I'll sit down. Here's your cost on your supplement. Don't forget, here's your Part B premium. Don't forget, here's your drug costs. So you might pay for your drug plan. Some plans are premium. Their premium is 0. Some of them are 7, 14, 25. It depends on the plan you're in. So, factor that all in. And I say get a nice average for you with this plan and your Part B. You're looking $380 a month for your health care. So factor that in. Will that go up every year? Yeah. So there's going to be increases on the Part B, increases on the supplement plan. So keep that in mind when you're looking at, here's my income. I have to make sure I have this for my health care.
See, I'm asking that from a financial planner's point of view because budgeting for healthcare costs in retirement, I will say even 5 years ago, because the plans were so robust, it was essentially we were budgeting their Part B premium because most things were covered. There was no copays, there was no additional cost. Well, the landscape's rapidly changing. So people need to plan differently. And we're planning differently with our clients, looking at this stuff going, okay, and by the way, the 202, that's the minimum you pay based on your income.
Correct.
It can go up to $600-700, right?
Yes. If depending on your income, and it's $109,000 this year.
Okay.
Is over that, you're going to pay more for your Part B premium. That's for an individual. So every year you're looking at they look at that and say, if you make X amount, you're going to pay this much more for your Part B premium.
Okay.
The supplement plans, they don't look at anything like that. They're not worried about it, but that you need to factor in.
Okay. Now, when you say the supplement plans, meaning like your Medicare supplement,
Correct.
like not a Medicare Advantage, a Medicare supplement.
Yeah. When I sit down with people, first getting started, I say, here's your two options, basically, or 3. You can go basic Medicare, nothing else. I've got Medicare Part A and Part B. Everything else I'll pay. Okay. Probably not the best option, but it's an option for you.
And why? There's some pretty substantial deductibles.
Yeah, because the deductible on your Part A is going to be about $1,600 when you go in the hospital. They're going to pay 80%. You'll be responsible for the other 20. On the Part B, there's a deductible whether you're on a plan or not, so you're still going to be responsible. This year it is $263, I believe, off the top. Yeah, and then so last year it was $257. But these deductibles, you're responsible for that. And again, on your Part B, they're going to pay 80%. They're going to pay 80. You're responsible for 20. So, hospital stay, $100,000 hospital stay, you're looking $20,000.
And that's not an annual deductible like people are used to. It could be if you go back into the I think it's 90 days.
It's a per benefit period. So if you're admitted within 90 days with that same ailment, you've already paid your deductible. If you're admitted for a different ailment, all right, this is a different thing. It's another deductible. If 90 days later you're admitted for that same or different ailment, you're paying that deductible again. So it could be very substantial is what you're paying. So, that's your option 0. Option 1 would be adding that supplement plan. And those typically have a monthly premium. Could be $150. I always tell people average out $150, $160 a month. It's based on zip code and gender. So that's all they look at. We don't care. Your age, zip code, and gender is the way they look at it. And you're going to pay that month in, month out. That's the gap coverage. So it'll cover that Part A deductible. It'll cover that Part A co-payment, that 20%. So you're not responsible for that. It won't pay the $202 for your Part B premium. It won't pay for the deductible, but it'll pay that other 80% for your doctor visits and the coverage, the outpatient, things along that lines with Part B. You're still going to have that Medicare drug plan you're going to have to get. And then the option 3 that you need to look at, do I want an Advantage plan? You don't pay anything per month. You pay as you go. So essentially I tell people, is it a supplement plan or is it an Advantage plan? That's what you need to think of right now. Which way do you want to go? Then we'll discuss the different plan options.
And just on the Medigap policies or supplement, both terms get thrown around a lot. And they're the same thing.
They are the same thing.
I just want our listeners to understand that that's an age-based premium.
Yes.
So as you age, that premium's going up.
It'll go up
it's
with,
not
with
locked
your
in.
age.
Right.
And some of them will do it on community-based ratings too. So it may not be age-based. So they don't look at you turning 67, 68, things along that line. They're looking at the community as a whole. And
Okay.
they kind of say, hey, in your community, we paid more, so you're going to have an increase. Or your community, and you're not going to have as big an increase because your community did well. We didn't pay as much. So there's that option as well on some of the plans.
I've always found that interesting because if you're 65, it's punitive. If you're 85, it's a great deal,
Yes.
right?
Yep.
Okay. So that's always, when you price insurance, there's always some form of discrimination, whether people like to hear that or not. You know, if you pay less because you're young and have to pay more because you're older, you know, they've argued that that's a form of discrimination. Community-based rating is the younger people are subsidizing the older people.
Sure.
Theoretically, may not be the case, but that's what it looks like. So really, where is it better off? So, but that's a debate for another day.
And we can't even look at a rhyme or reason on the increases even. You know, so I was working with a gentleman yesterday, and he goes, can you give me the increases for these 3 different companies over the last 5 years? And I said, I'll look into it. I said, but that's not telling us what it's going to be tomorrow or next year.
That's right.
You know, and the gentleman I talked to, he even said, he goes, it's like looking at the stock market and saying, well, my stock did great last year. It's going to do great next year. No, that's not necessarily true. So, and so, you know, the history doesn't exactly tell us what the future is going to be.
What we say in the investment business is past performance is not indicative or a guarantee of future results.
Boy, that's a nice way to say it. I wish I could have said it that way.
I've only read that disclaimer for 40 years. That's why it's right on the top of my head, right?
Is that the tattoo on you?
That's right.
How's that go again?
Past performance is not indicative or a guarantee of future results.
All right, I'm going to write that down.
Okay.
So.
Well, you're going to ask me a third time. I'm going to be like, I don't know what I said, Jerry. There's other big misconceptions that you run into.
The other big one is long-term care.
Okay.
So people, you know, feel that like, oh, well, I got, you know, my Medicare. If I go into a nursing home, they're going to cover it, and they don't. So that's a big misconception. People think, hey, as long as I have my Medicare now, if you need to take over, and Medicaid will say, all right, you know, we've spent down your net worth and your wealth, and if you got less than that $2,000, it picks up and pays for everything. But if you've got any type of wealth, they're not covering your stay in a nursing home for long-term care.
So let's talk about that for a minute. And here's why, in my world, why that just became a big deal. Family member went into a nursing home, private pay, and this is actually having me rethink on the financial planning side, having more conversations about long-term care insurance. And it's a wonderful facility. It's competitively priced, great services, and he's private pay. And I was helping this individual pay their bills at the time, and they said, well, we need the first month in advance. I said, sure, no problem. How much? What do you think?
I don't know, probably $14,000 or something.
$12,700. So all of a sudden, nursing home staying, excuse me, now I'm adding that out, and I'm thinking, okay, nursing home care just went to $150,000 a year, right? And this is in Youngstown, Ohio. This isn't
It's
big city numbers. This isn't Cleveland, Pittsburgh, Columbus numbers. This is Youngstown, Ohio numbers. So I can only imagine in the bigger cities what this is really going to be. So when people have that misconception that there's nursing home coverage, they do not. There's rehab coverage, right?
Sure. I mean, your skilled nursing facilities, if you're injured, you know, and it'll pay that 20 days, and day 21, you're going to start your co-pays on that. And, you know, that's a nice benefit. And they will cover if you're in, like I said, when it gets that long-term care, like, hey, I'm not getting out of here, that's going to cost a lot of money. And if they know, hey, it's going to continue for, you know, that where your assets, your home, what you thought you'd leave to your kids, you have to spend that down, or it's not going to cover. You won't go on the Medicaid to cover your long-term care.
Right.
And like you said, it gets very expensive. So I try to convey that to everybody. You know, are you thinking about this? And nobody wants to think about the bad things, but I think that's kind of like our job. Say, well, here's all scenarios. what if this? Nobody wants to happen, but if this did happen, are you prepared for what it would cost you?
Jerry, I've always said that to my financial planning clients, where it's easy to have the academic conversation. It's another to have that same conversation about you.
Correct.
Because now it got really personal. So just a question. Do you find people asking you more about, Jerry, can we talk, and can I buy long-term care insurance from you? Are you getting more of those conversations?
I'm getting more of those, and even whether it's the life insurance or long-term care, things because they're looking at going, hey, I'm 65, I'm 60, whatever, I'm retiring now, and I'd like to have a nice life. What about this? Or, even if it's just, the end of life, or, getting something to pay for their funeral expenses, final expense. Well, what if this happened? I'd like to leave this for my kids, and I'd like to have something that the funeral's covered, and they can have the house and whatever my assets are.
Because here's why I'm bringing that up. And this is why I think if you're having the Medicare conversation with someone like you, so I'm coming at it from a financial planner's point of view. 2021, just 4 short years ago, I know it's 26, but just getting into it, the statistics were that long-term care was averaging $90,000 a year nationwide, which we've always said, okay, that's probably a little high for this area. And the average nursing home stay was 19 months. Okay. So make it 20 months, make my math easy, and say that's $180,000. Okay. And let's say the person was getting $30,000 a year in Social Security. Okay. So we would say as financial planners, well, your risk is $200,000. If you paid them your Social Security, which you normally do, they're $60,000. So the real risk is $140,000.
Okay.
And based on what your income level was, the sad thing is the people that really need it, that don't want to go on Medicaid, can't really afford it.
Correct.
That's the math. Then there's this middle gap in their net worth of what people that can't afford it should pay, because theirs is the estate most at risk. And then after a certain level of net worth, the argument was always you can just self-insure for the price of the product.
Sure.
Okay. But now that nursing home stays 22 months. So it went up by 3 months. Okay. And now we're looking at maybe a $325,000 conversation instead of a $200,000 conversation. So I'm, as a financial planner, rethinking what we recommend our clients do in terms of buying long-term care, and it's around this conversation, with their Medicare. Should they be on original Medicare? Should they be on a Medicare Advantage? What does my life look like with my net worth, and what's my risk to my net worth because of the rising nursing home costs? So this is why having an advisor is so vital, because I just gave an example where this world rapidly changed.
Sure. And I mean, that same thing. A friend was in, and was in for several months, and was like, I didn't realize it was going to cost this much. So this is a friend of a friend that was helping. He's like, he had no clue that it was going to cost, and he had the money, but it's spending down. It's costing him on and on. So that amount of money, or what he was going to leave to the children, he was using that up because he was in that gap. So it wasn't down to the point where Medicaid would immediately take over, but also the self-insured. Yeah, he was doing that, but he was spending down, his assets to that point so that he could stay in the facility that he wanted to stay in. So
I only have a few minutes left, but I want to go over a couple more things. Number one, I think what ended up becoming a huge benefit of the show today was budgeting.
Sure.
How much more healthcare is really costing seniors than maybe they're anticipating, how different the market is, right?
Sure.
The misconceptions that people have coming into this, and why the need for an advisor is so important in this arena. And I say it all the time, Jared, that I wouldn't have understood the complexities unless I had to get licensed so that we could get paid the commissions on what you do. And going through this, I'm like, holy smokes.
It's very, there's a lot of information there, and there's, different avenues that you can look at that people kind of gloss over. Like, well, I saw a commercial, right? I saw this, and it's like, well, that you're not, that's not an option for you. You can't get that, $300 a month food card. And you're not in that situation. And I can kind of feel bad because they pick up the phone and they call that number, and that, don't want to say a bait and switch, but that operator on the other end goes, yeah, well, it's not that one, but let me put you in this plan.
Right.
And the next thing you know, they're looking at it going, what did I just do? So the other thing I like doing with people is, I sit down and I love having you guys here on the wealth team that kind of sit down and go, hey, I know a little bit about this, but you got to talk to Steve and Leo. That's, here's where we go from here. I got the Medicare taken care of. I understand this a little bit. Let me push you on these guys, because they're the ones that know the stuff. And it's kind of nice. It's all in-house.
And that's why we do the same with you. When it comes to that, I don't even have the conversation. And I just say, I know enough to be dangerous. I know enough to know that it's complicated. Here, I'll sometimes just say, let me go get Jerry.
And it works out very well. And it's good. It's what works out for the clients.
Right. Mm-hmm. That's part of what we do here at Gem Young Insurance and Wealth Advisors, is the holistic approach. And all these things matter. And you don't know how much they matter till you're in the throes of it, right?
Yep.
All right, Jerry. Well, great show today. Great information as always from you.
It was a lot of fun.
All right. Okay. This is Leo Daprile. This is the Gem Young Wealthcast. We'll be back after this break.
At Gem Young Insurance and Wealth Advisors, we believe your financial goals deserve more than just a plan. They deserve a team. From planning for a work-optional lifestyle to managing risk and supporting your everyday needs. Our financial planners, paraplanners, and service team work together to build a strategy that truly fits your life. Planning for the future? We'll help you make that confident financial decisions and achieve lasting peace of mind. Call Gem Young Insurance and Wealth Advisors today, 330-533-6936, to schedule your fit meeting and start building your financial future.
Hey, it's Medicare Jer here from Gem Young Insurance and Wealth Advisors. Medicare can feel confusing, but I'm here to make it simple. With the right Medicare Advantage or supplement plan, you can worry less about unexpected healthcare costs and focus more on enjoying life. Let's make sure you've got the coverage that fits your needs and gives you peace of mind. Call me, Medicare Jer, at Gem Young Insurance and Wealth Advisors today at 330-533-7941 to schedule your appointment, and let's get your plan in place.
By calling this number, you will be speaking to a licensed insurance agent to answer your questions or provide additional information about Medicare Advantage plans, prescription drug plans, or Medicare supplement insurance plans. This is an advertisement for insurance.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
Now, back to the Gem Young Wealthcast, brought to you by Gem Young Insurance and Wealth Advisors. Once again, here's Leo Daprile.
Welcome back to the Gem Young Wealthcast. This is Leo Daprile. Wow, that was some interesting stuff today with Jerry. It amazes me, no matter how long I'm in this business, that when I have guests like Jerry, how much more I learn. So many more things I don't necessarily think about because I'm not in it every day. I know about it, and that's why we do these things for you, to give you more insight on what's really happening. For instance, I didn't realize how much more medical care is costing our seniors. When he was saying, here's the premium, and I'm sure a lot of you out there are thinking, I'm just paying my Part B premium, whether you have a Medicare plan or a Medicare Advantage plan, or if you have the Medicare and then you have the supplement, you kind of think, okay, these are my fixed costs. I'm good. I'm going to set it and we're going to forget it and we're going to go. I'm amazed at how much the cost is going up for the out-of-pocket costs for seniors and what they're beginning to have to average. So it sounds to me like it's almost a $300 a month additional between co-pays for drugs, doctors, or whatever it may be. And 5 years ago, we weren't having this conversation. So this is a big hit to people's budgets. So this is important. So I'm glad we talked through that today. I think it's important when you're having these conversations about where you are with the type of Medicare plan you go with, that as a financial planner, I'm saying I think the conversation needs to really pick up speed over long-term care products that you should be considering. Here's been the problem for years, that people always want to talk about it and they see the cost of it and they kind of nix it. And quite frankly, to a certain degree, I did too. But now, after going through the real world situation of long-term care with a family member and seeing what that costs, I'm kind of changing my opinion on that, and I'm giving that a harder look than maybe I would have given before. So that's why these shows start out saying, okay, we're not just going to tell you about what changed with Medicare. We're going to start talking about, and that's where Jerry's been so great at this, is talking about how these products really work and how they really affect your lives. It's important, and we're going to start changing our philosophy here about increasing the budgets for medical care in retirement, because that's become such a different animal than it's been. The long-term care, again, one of Jerry's biggest misconceptions is people think they have it as part of their Medicare, and they don't. I also thought it was important that you have to carefully sign up for Medicare and make sure you're attentive to it. And even though Part A is free, it's not free. You paid for it throughout your life. And there's a cost to Part B, which is income dependent. But it's really important when you sign up for your Part B. So if you haven't already and you're getting near that, you need to really pay attention to that. So that was another key feature. So, and just the complexity of the companies out there, and how, like we were talking about during the show 5 years ago, it was kind of a same scenario. One company looked just like the other. It's the common mistake people are making today, especially when it comes to their auto and home insurance. You hear me gripe about that all the time, because that's what I see people doing. But this is different. And now we're in a benefit takeaway mode with the insurance industry, and with the changes coming in 2027 in terms of how much the federal government may limit their reimbursement to insurance companies. There could be significant cuts coming next year. So keep an eye on this show. We'll keep you posted as these changes come about. I'm sure in August or September, before we get into the AEP, we're going to have Jerry back on, and we're going to talk about all of these things. But just wanted to arm you for what you have today. So again, I appreciate Jerry coming on the show today. It's always pretty interesting stuff. Love having him on. He's easy to talk to. Give him a call if you need some help. I appreciate you listening today. This is Leo Daprile. This is the Gem Young Wealthcast. Until next time.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
At Gem Young Insurance and Wealth Advisors, we know insurance can feel complicated and overwhelming. That's why our team is here to listen, understand your unique situation, and provide solutions that work for you. From home and auto to life, plus a team dedicated just to commercial insurance, we help protect what matters most without the stress. Don't wait until an issue arises. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 to schedule your fit meeting and get the protection you need today. At Gem Young Insurance and Wealth Advisors, we know every financial journey is unique. That's why our team of financial planners, paraplanners, and service professionals work together to provide personalized strategies for a work-optional lifestyle, investments, and risk management. We're here to help you plan for today, protect tomorrow, and enjoy the life you've worked so hard for. Take the first step toward financial confidence. Call Gem Young Insurance and Wealth Advisors at 330-533-6936 to schedule your fit meeting today.
Join me every week where we talk anything and everything about your money. Have a topic you want to hear more about? Email Katie, that's Kayti, at gemyoung.com. You can find us on Apple, Spotify, and the iHeartRadio apps. Until next time, this is Leo Daprile.